On the gold side, I think I was wrong, and I think most people are wrong. And I've looked at the technicals now, and you've got to be ready to flex. Doing the unthinkable. I'm going to upset everybody here. The stackers, and I'm a stacker, by the way. The traders, because I'm going to do a 180.
With the money supply both in the US and China making all-time highs, doesn't look like it's doing a U-turn right now.
You're watching CapitalCosm. My name is Danny. It is July 29th, 2025. And do not adjust your television set, mobile device, laptop, whatever you may be viewing this podcast on, because we do have a special episode for you here today. We have a panel discussion with the market sniper, Francis Hunt, and the rising star in the gold and silver stacking space, Eric Yeung. Gents, I appreciate your time. Thank you so much for coming on the show.
Thank you, Danny.
Yeah, so let's I believe the audience, is fairly familiar with you guys. So let's just skip the pleasantries and, dive right into the meat and potatoes here. I'll kick it off here with you, Francis, because you just it seems like you've got a massive update you want to share with the audience here. It's this is probably a grenade that you're throwing into the room. So I'll let you kick it off, and Eric, I'll let you respond. But Francis, what have you got going on your radar screen right now?
Yeah, so on the gold side, I think I was wrong, and I think most people are wrong. And I've looked at the technicals now, and you've got to be ready to flex. And I want to take you on a short tail, and it involves sharing the chart of how things panned and where we are and why. I'm doing the unthinkable. I'm going to upset everybody here. The stackers, and I'm a stacker, by the way. The traders, because I'm going to do a 180. And everybody, well, not everybody, but the less understanding, or the people that don't understand technical analysis, resent a 180-degree turn always. Flip-flopping is a virtue in technical analysis. It's a sin in most other things, especially politics. And I'm going to make the case for why actually I'm turning to the fact that we could be facing the period where the demand-destroying event comes. That is this coming August. We're talking on the tail end of July, and we've got August to wait. But I also want to be sympathetic. I really love Eric's work. And I want, after this, I want to hear all of what he thinks. And it's going to be nice to hear his take as well. So I don't want to be overly dominant, but I need a bit of time to just show this charting. So if we just show you this, Danny, and I was with you on your show, and everyone was very benign round about this time on gold, when we just had a technical break of 2000. We'd had, since 2021, a lot of failed attempts. So let's just remind everybody on the broadening structure. So this is technical analysis a la the market sniper. And this was a continuation pattern, but it was a lengthy one, and it was a ball breaker, because you had that 2021 run, you had a down leg. You had an attempt here, it got beaten back, you had a down leg. You had an attempt here, which tried a couple of times in a virtuous period, and you had a down leg that still took you to 1800. Once, twice, three times, and then we said we said this particular winding up structure that was sitting and supporting on 2000 after the fourth break, which was the key break for us, was going to be your golden opportunity for a target, and we spoke 2,900, 3,000 back then. And that was the target. It came from this flagpole that's off there, and that goes all the way up to there, and there was the 3,000 level. So that was our call for the target, and we repeated it. This is now a year-old clip, November 24. My apologies, April 24, and we're already, a year plus on that. That break began, and we were having a pre-chat now, and Eric was saying, you don't get things going straight up. This was about as good as you get for almost straight up, if you look at it. Very low vol, couple of winding ups on the way, and then you did your 2.9, you ran your 3K, and then you started what we typically expect, a progress decay, a little bit of slam back. But what happened around April 1 year later? Something unique. We had peak Trump tariff tantrum. This is when he was attacking China, Europe. Forget this recent European deal. We can talk if you want to about that.
The Liberation Day.
Yes, that's right. He was doing all of that. What happened? a prediction we had made in September 22 when Truss and Kwarteng were thrown under the bus and the pound collapsed and then bond market collapsed. We said that moment for the debt markets is coming for America. Trump went peak tariff tantrum. The bonds rate spiked, the valuations down. And instead of the dollar going up on those interest rate climbs, the dollar collapsed. And that's where then certain people said, well, it was the Japanese, the Chinese, somebody else did this to them. In actual fact, it was later shown Americans in America were the biggest sellers of A, the treasuries, which caused the rate run, B, dollars and moving it elsewhere. But let's ignore who got scapegoated. That led to what is almost a turbocharged blow-off spike there. The Trump tariff tantrum of April that gave us a baby's breath only at 3.5. We traded 3.5 for a second. So our targets of 293K were good. We started to sell off. Then an event intervened and gave us an exhaustive throw up. Okay, initially when I was looking at this pattern, now I need to drop time frames. I was like continuation, bull bias, debt is a busted flush, etc., etc. But then I'm also listening, and I'm going to give you the social things. George Gammon's channel, what if they re-rate gold to 20K? Clive Thompson, $15,000 to be re-rated. Recently, Luke Broman, for example, all good analysts, by not knocking anybody out, all good analysts, but lauded in Zero Hedge for saying what we said in 2020, that there's reserve asset substitution away from debt into gold. This is it. Look how well it explains it. This is all coming out. So we're no longer fringe. We're mainstream, all our takes, opinion, and too many people are standing on my side of the boat. Then you listen to SLV, no borrowing, lease rates up on platinum and silver. One, it could be manufactured or it's true. If it's true, they're not going to let us win out without a fight. So that's a bit of fundamental and a bit of what I call sentiment indicator. Initially, we said this was a bit ascending for us. We discussed this in the community, but if it breaks, we're going on an upside. It broke. We were taking high fives and being, the usual. Market will always humble you and make you reconsider. But I was doing it a bit for entertainment purposes. I'm walking around London, good triggering event, rah, 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 bit too cocky and confident. The momentum in terms of the way we got rejected strikes me as exhaustive. Don't forget, you had a real reason that everyone panicked out of debt and you got a real exhaustive sell-off there that smashed you down there. That we typically call a slap in the face. And as I say, it mimics the technicals of the bond market, which I can show you if you're interested to see. This is a very similar setup. This momentum to the downside, there's your exhaustive sell there. There's the second one. Typically, they should get less when you're doing a volatility squeeze. The calming is part of the price behavior. That's why we call it the Hunt volatility funnel. It's the funneling down of volatility. That was a major surge that looked single-minded, and we were cocky confident. That engulfed it and is hard down. Now we have one pattern that is the hardest to spot, and we usually get it wrong, but we've learned to pivot quicker. And this is the bit where everyone hates you for changing your view or your take. And the truth of the matter is, it's a sign of a good technical analyst, but you'll not be loved for it. This is a slap in the face event that was driven by what I just described, the Trump tariff tantrums. When we had already made the 3K targets and we're in a progress decay phase, we got this massive blow off. Now, too much of what we talk about is mainstream, and this is in fact the squeeze. What you could get next, a weak rally, for example. It's been very dead at those low levels. This is not much price action. Given how hard you came down, if you were to be bouncing, you should already be bouncing. It's not happening. A weak rally sets up the flag, and we get our third impulse for a downside move. That ties in with a demand-destroying event where everything gets sold. You could also have news that's gold-specific. All gold holders need to register with a registered vaulting service, which will be on the blockchain for your safety, regular audits. Who knows? There could be a narrative that drives it. That could be gold specific, or we don't even need that. It could be war breaks out. The other thing that's happened that I called, but I'd stopped watching because it was almost a fait accompli, was the gold to oil ratio. We said go. Everybody thinks all commodities are going to run. We said energy complex is not going to be good. We're actually mildly bearish oil, but very bullish gold. Now, we said draw the inverted head and shoulders here. Here you go on gold versus oil. So that's gold divided by oil, weekly chart. We said you should make these targets here, dual targets up top there. This was, don't forget, you had a low when oil was 129 and gold still hadn't broken out the 2K. That was 14 barrels you got for 1 ounce of gold. The neckline was 28. We said you should be making 52. I missed that. It actually had already run and happened. This is the thing. We get so excited and we're in the bull market. We're all watching the 15-minute chart and the 5-minute chart in the ever pumpamentals of the run up, and key targets have been dropping that were set. And for people that think, technical analysis, that doesn't work. Okay, it's done that. That head and shoulders is part of the reason we called the previous. We said oil to trade single digits, one of our biggest known calls that we're famous for. On a stage, we've got 2 recordings of it. We said at $67, we see a single digit oil. People are not pricing it suitably. It hasn't been there for 35 years. I know I sound insane. It could happen. There's that head and shoulders that did it. It went to infinite. If you did that trade that we called, the same trade, long gold, short oil, you had the 21 pump high of gold and you saw the collapse to zero, never traded at zero before, which was obscene. Okay, it was CV19. It was kind of lucky, but that was the most extreme right we've ever been. And that target is now made. It tells me pullback season. The bond market, our other most famous call, is always the difficult. September of 2020 looks exactly like that gold chart. What happens is the money chases in. The money keeps chasing in on the ascending part here because they say, oh, it's cheap, quick. The late bulls are coming in. The late bulls are coming in. Each bounce, late bulls. Then you try run and bang, you get spanked. So I've spoken a lot and there's Eric I want to hear from. So let me just hand back to you, but come back at me if you will.
Yeah, Eric, go ahead.
So I want to read something from George Philip Fair that he posted this morning. Okay. So he wrote, something has to break. Stock continue to go higher until they don't. A lot of variables make absolutely no sense right now. Okay, so I agree with both Francis and Josh. Okay, that we are at a very peculiar juncture right now. So I always said myself in the past that, let's say if the U.S. equity market implodes, or at least have a huge correction at any given point, it will drag both gold and silver down, and miners as well, right? Very likely because of the US dollar liquidity squeeze. And that may very much happen at any given point in the next 30 days. I mean, Francis has identified some very good indicators of this potentially happening imminently. And it'll make sense, I guess, like that it happens in the next, month or two, because as we discussed, Eddie, the LBMA has a really low free float of physical gold and silver in this juncture. And if they manage to slam the gold and silver price, paper gold and silver price, a lot lower, along with a industry-wide fear that's infectious to every asset class, it's possible that they can get physical holders of gold and silver to puke out the physical gold and silver so that it can recirculate back into the system. So what I'm saying is that what Francis just told us is entirely possible.
And Francis, do you see this only occurring in the event of a mass market liquidation sell-off, or could this happen within a vacuum? Could it happen in a situation or an environment where the market just keeps on going higher like it has, but where gold and silver both sell off regardless of the broad market?
Yeah, so good question. They're very good at achieving multiple goals with a single event. And you've got to understand, you just had Kramer, who's almost a caricature figure for inverse rule and all of that, effing and blinding about there being no rate cuts. You've got a housing market collapse that is in play. You've got massive inventories, but you haven't had the full contagion yet. You've got a lot of things on a precipice, as was already alluded to by Eric. So what I imagine is that they've got these bottlenecks and they never let you get the win. By the time it becomes public knowledge, if it's true, as I say, which I think it probably is, they never let you get the win. We had the repo crisis in September, and that's when this debt market started contagion. You look at the September call, well, actually it was 19 in September, but the debt markets needed and the repo markets needed a fix. So what did they do? They started the March 2020 events, and that allowed them to proliferate. That's how you get a lot of bonds out. They need to get a lot of bonds out. They've been shortening the curve. They are painting themselves into the shorting duration of holdings. So the long end is already largely losing and staying rather high. They need that to come down, definitely, but they definitely need even the shorter medium term to be attractive for bonds. So when and if they do some sort of disinflationary demand destroying event, and I would say there's not that much demand really already out there at the retail level, but they need to re-rate. You've got the Buffett indicator at all-time highs on the equity markets. How did they do it during CV19? They created the event and they flushed out the equity market cap right down. We've had quite a bit of stories of insider selling, and that Bitcoin on CV19 also collapsed. It traded under 4,000 on some exchanges when it had been as high as 14 on a middling period. So all the risk assets, it's not that Bitcoin's significant, but the stock market capital would. So you get a lot of money running, and what you want to try do is direct that to bonds. And if they do a risk offing and they position gold as essentially risk off, and they maybe throw some less popular news in about gold, and the usual nonsense about Ghana finding gorilla zillions of ounces and a gold comet that's about to hit Fort Knox. That's 4 nines in pure gold, not even a stone on it, and all other funny stories. They create the gold contraction. You don't ever go up in a straight line, as Eric was saying, and you can see the similarity. You get this volatility final surge, and then you get a harsh slap in the face. I sometimes refer to this as the church steeple type price action. Now, if you go back to that gold chart that I was illustrating to you, you've got the absolute created geopolitical event of America attacking everyone. I'm talking about Trump economically attacking everybody. And then suddenly the divestment that occurred and the slap that caused in the bond market, that caused a flush of money, a real squeeze. And you often finish a move. So I'm saying 3,500, beautifully the midpoint between 3 and 4K, is a localized high for now, on balance of possibilities. Not I'm going to 100% be wrong, but I'm flipping. And I think this increases the likelihood of a demand-destroying event. And I wanted to show you that same ascending structure on one of our most famous calls, when Raoul Powell and many other influencers were saying, buy bonds where diamonds, this triangle only goes up. I've got people following me who started...
What are we looking at here, Francis? This is what, the 20-year yield?
TLT. Sorry, I should have said. The TLT, this is the bond market
TLT,
call
okay.
that we did on the long... It's 20 years plus. So it's a debt instrument of long duration. It's an ETF, debt made up of debt instruments of long duration, 20s and 30 years. And we were choosing that because we can short it. And it's a very similar setup. And what you see is the strong ascent. It's the most deceptive of our HVFs. It comes at a final trend and it has the sharpest blow off. And this actually is not part of the three impulses anymore. It's a slap in the face where you're going, you've gone far enough. That's your warning. It's kind of like you're being a bit pushy with a girl at the bar, in making your interest clear, and you've spoilt it from there. Everything is how do you just gracefully depart without losing face. You got the slap in the face, and that's it. You were chatting so nicely, and I like to create metaphors for humor, but essentially the three impulses eventually become this. The high volatility event, and that's it. And it's very ascending, and it's a downside break. And that's what we draw. Stops are there, you get super tight, and we traded it down to the floor that was that falling wedge over there, stroke descending triangle over there. That set up the final surge, but got that huge rejection. Look at that rejection. Now listen to how I described the gold move, and I think we're flipping. I think there's a decent chance that we flip, and I'm risking off, and I will. This is not designed to infuriate all the 75 to 95 people that puke in comments, IQ people, but I may short gold to get some profits to buy more gold. And I'm not going to be the guy that made this happen if it gives me the correct setup, because we all can't stop what's going to happen necessarily. We are tippling in my world, into a communist totalitarian society. We are already there in some senses. If you look at, the puppetry that we're being shown on this trade talk and all of that, theater. So you've just got to be a rich slave rather than a poor one sometimes, if that's the way of the world. And that's where I'm at. And this was a big, big call. And then it made the head and shoulders. And that then triggered, that target was made. This has been the debt devaluation call. Too many people seem to have now finally woken up, and we're no longer fringe. And I'm only comfortable when I'm fringe, semi-fringe. Since Stanley Druckenmiller came out, Paul Tudor Jones, they short debt and all of this, they're going to probably get a surge. Stock markets can sell off potentially, and I think they're going to try direct some money into bonds. Then they could get some cuts. Long run, rates only go up, but if you create enough fear and you cause enough, the aliens, that thing they saw in far out space that is coming whizzing toward them. The green men are going to attack us. Green lives matter more than ours. Who knows? Let's have some fun. But that's where I'm at. And this is the season: September, August, September, October, and sometimes obviously rolls into November and beyond. But I think I've got the jitters now. And if you look at this, it hasn't made new lows. It hasn't made the TLT even. If you look at that, it's marginally lower lows here, marginally lower lows, slightly higher low, getting less volatile. That can be, in some books, basing, the TLT in terms of that. So they need to get a bid on that. I wouldn't rush into shorting TLT. Well, I've been a natural bear, and we were early, way earlier than everyone else on that, and that's turned out to be a very, very big call, and then a head and shoulders afterwards. I don't think that's the same for gold, but I do think you can sell off. And that could mean it's going to be a bargain buyer's basement if you risk off now, because we all want cheaper gold. And the other thing we've said that we got criticized for is we said there's a possibility. Again, this is possibilities and probabilities with technical analysis on the gold-silver ratio, that you might get a spike in a demand-destroying event, that is disinflationary. And my problem is everyone tends to react very badly with that and said, you cost me money, or whatever the case may be. No, we're bullish, long run macro as an investor. But everyone thought here that we were going down and that we're about to run to 30 and all these lovely numbers when this was spilling. And it's flagged. There's a flag in there, that goes like that.
Hey, Francis, let me allow Eric to get a word in here really quick as well. Eric, so we just heard Francis's case. I'm going to ask the same question to you. Can we anticipate? I mean, if you had to bet $1 on this stuff, clearly you've bet more than $1. But gun to your head, does the gold and silver price rise without does it plummet? What are the chances that it plummets without a cataclysmic broad market event? If you had to kind of, stick your neck out, which I presume I kind of already have the answer to this, what direction do you anticipate prices taking? And I did receive your visuals here. I'll post them here up in a second. You've got the money supply making new all-time highs. We'll get that up here in just a bit. But go ahead and answer the question while I pull all this stuff up.
So I think, gold and silver dumping in this juncture without a broad market implosion or big correction with a US dollar liquidity squeeze is quite low, in my opinion. But as a responsible investor, I hold a lot of US dollar cash, and I also own some US treasuries, for collecting yield, even though like they're toxic, right? I own some anyway. Um, through several funds that I own, okay, and these insurance funds there. Anyway, the bottom line is, I think, like you said, Danny, with the money supply both in the US and China making all-time highs, doesn't look like it's doing a U-turn right now. I don't know. I mean, normally I say yes, they can just dump it, but with the tight physical supply situation and with China launching, these Shanghai Gold Exchange offshore vaults everywhere. They started with Hong Kong, potentially might do it in Saudi Arabia and Singapore as well very soon. I just don't know. Like, if they are able to pull this off without a market-wide, like I said, market-wide kind of like contraction, right? And although it's not impossible, I keep saying that. Okay, if it happens, without COVID this time, maybe potentially they are able to slam gold back to 3,000, for example. If they're able to do that, then silver might go back to the breakout, point, right? Of $33, 33, $35 is very possible. And then your miners will absolutely dump in that scenario. Okay? So, does that answer your question, Danny?
Yeah,
What you said?
definitely. You also
Yeah.
mentioned China. You've got an
Yeah.
article here that you sent me as well regarding China's money supply. Explain
Yes.
to us what's ongoing in China as well.
So that's like an article from my friend Vince Lancy. So he did some research on the Chinese money supply situation, and he discovered that China essentially have turned on the taps, okay, of M of M1 money supply, which is what you want to look at in China. Um, you know, um, as a source of how much liquidity is in the system. And to support his claim for that, if you look at the Chinese stock market and the Hang Seng, it has actually been going up in the last 2 months. I mean, it went sideways for a long time, and then it started going up again in the last 2 months. Even though if you compare it to the U.S. equity market, I mean, still way below what the U.S. equities are trading in terms of like PE ratio to the price of the equities themselves, right? So you take all that together, like I said, I just simply think I don't think, at least with the data that I'm seeing, I don't think the liquidity, global liquidity, is going to turn around immediately. But again, like Francis said, some unexpected events might pop up, like escalation in Ukraine, for example, right, with Russia, or some escalation in the Middle East where everything implodes. And then, you get that, I don't want to use that word, but like you get that milkshake, right? Everything gets sucked in
Hmm.
into the US dollar.
But
It's
we've
possible.
seen gold
Yes.
move to the upside during these events in the past, haven't we? We've seen gold and oil typically move favorably to the upside
Yes.
when you have like these these gray swans, if you will?
Yeah, well, those events. I think if you look at those daily movements of gold, silver, and oil, they actually try to slap gold, silver, and oil during those events, but they always ended up higher. So those were failed slams. Okay, but like you never know. Again, because of the situation we're in right now, where gold and silver has been consolidating at this high level for almost 2 months now. You never know. Maybe the next time when an event like that happens, you get that US dollar contraction where, like Francis said, everything just kind of falls. It's possible. I'm just, being open-minded here to that possibility.
Correct, but probability-wise, I mean, where do you kind of put your chips here, Eric?
Personally, I'm not selling any of my gold, silver, or miners. I just hold on to what I have. But at the same time, I didn't really add a lot of gold, silver, and miners in the last 6 months. Okay, I added a bit, but not a lot. So I'm just going to keep what I have, and I'm going to keep my big cash positions just in case I'm wrong.
Gotcha. Hey, Francis, I mean, what do you put? What are the odds that you put that something catastrophic to the I mean, is it an overwhelming probability in your analysis, or do you still leave a good chunk of chance in the event that we continue to see things rally up to the upside?
So the interesting thing is when you get a structure like what we were showing you on the gold, is there's some form of breakout building regardless. So you're either 100% right or you're 180 degrees wrong, and I'm regularly both. I think it's being underpriced, and the more I'm thinking about it and putting on the cloak now of someone. And remember, that doesn't mean it's a bear market now. Eric was highlighting things don't go up in a straight line. Actually, that gold move from 2011 is in a channel of rails that's pretty much, with minor, not more than a month, typically the longest one maybe 6 weeks, of continuations perpetually going up without a major slam. I also trade, here's some interesting side bits that I'll just throw up into the air. I also trade FX. I've been net long Swiss franc JPY, and it's been a killer trade. It's just kept going up, and it's now double topped on me, and I watch the yen. I will always watch the yen. To me, it's the cheap wholesale funding of the Casino of America. For a quick synopsis, that Swiss franc is now reversing. I drew a double top. It's actually already broken because I've been in a number of interviews now, and I'm watching it break. I gave that to the community and said, here, are we still sharing, by the way?
Yeah, go ahead.
Oh, my apologies. Yeah, okay. So if you have a look at that, that was up here. We still needed it to go down there. It's now at a triggering. Now that's unusual. Now the franc obviously cut rates to zero, so you're not getting a carry. But this has been another trend that is turning. Now you tend to get chunks of trends that turn simultaneously. And many people, actually, funny enough, when they think of Switzerland, they think of gold voltage, ironically, as well. So that's a triggering of a M top. You had a channel to the downside. You then had a channel to the upside. There's an M. There's the neckline. That will point to a start of a reversal for which the target might just be a little bit of a thing. So we could see the USD. My apologies. You could see the yen getting some strength. So then I want to run and go and look at something else. USD JPY. Now, if we have a look at this one, this is something that's currently quite high. Let me just get the chart nicely visual. It's a little bit scrunched up. In fact, I'll even go the 3-dayer and pull it around and out a bit. Sorry, let's get rid of that line. So if we have a look at what's going on in the yen, I'm worried about how the yen is being potentially manipulated as this cheap funding thing for the money. And by the way, such high levels of M2 across the globe, just to maintain us where we are, and gold needing this time to wind up and actually selling off that hard that it engulfs the breakout move on that amount of M2 is not a strong signal. I like the share of that M2, and I'm going, imagine that doesn't come out.
Isn't gold the leading indicator of this kind of inflation, though? I mean, you look back in 2020, gold began to rise before we saw any sort of inflation, at least reported from the CPI. There was about a 1 year lag, and then the M2 money supply also followed in tandem with the gold rise.
So gold is generally, if there starts to be money being proliferated extensively, it is what I would say is one of the earliest. I call it the anti-fiat, and I call it the king anti-fiat. So no one gets up from the table until the king stands up. So that's, I use that phraseology all the time. So you're absolutely right with what you're saying. But what I'm actually saying is it might now be signaling already. You're not looking at the current M2 numbers. You're giving whatever data they've given you. If they start weaning that M2 off, you might see the people that say, well, that's gold's super surge now over. So you'll start to see it in the gold in the event it starts to break down, which could have even have commenced with that rejection when it started to go higher. And it just got slammed all the way back down and beyond. That's the story of last quarter on the futures market, silver, very late, high volume, not-for-profit sale. You don't tend to see gold getting bullied like that. Maybe they couldn't bully silver because it's true. There's all these shortages and too many of the contracts would be marked for delivery if they shoved the price down. But they first sent gold and it started moving first. Silver held for a while and then it caught up quite badly. And I'm also watching platinum. But just going back to what I wanted to show you from your original question is this is very high volatility period for the USD JPY. And this was the August slam. And we are coming back to August season now. And I'm saying, could this be a right shoulder here where that is a left? We talk about M heads, so they're almost like double tops. This is slightly smaller. It's not quite the whole hog. But we've drawn that as a key line. If 141 fails on the USD JPY, you could have that unravel on the wholesale funding of the casino in America that's on the conveyor belt all the way from Japan. And if you listen to Prof. Werner, Richard Werner, who we've interviewed on our channel, you'll know that financially and economically, Japan is almost a slaved nation post-World War II to the biggest forces up in America. So they're running that show. And it's been functioned as a low cost. The carry trade is absolutely a thing.
Hey, Francis, do you mind if I share something with you really quick?
Sure.
Looking to invest in silver or create something unique? Go to firstmint.com and use the promo code CAPC. First Mint offers premium 0.999 plus silver bars and coins, perfect for stacking or gifting. Plus, they specialize in custom minting for businesses and events. Great for celebrating milestones or promoting your brand. For quality silver and trusted service, visit firstmint.com and use promo code CAPC and make your mark today. Once again, that's firstmint.com, promo code CAPC. And while you're there, check out this great deal ongoing now. So you've got the gold price here, illustrated by this candlestick chart in teal, I guess. You've got the M2 money supply. And what you'll notice is you started to see gold run all the way back in 2018. People thought that the run started in 2020, but it actually started in 2018. But it wasn't until 2020 that you saw M2 money supply begin to run too. Fast forward to 2022, that was really when the last bottom we had in gold, the local bottom. And ever since then, it's begun to rise. Now you look at where M2 bottomed, it was several months later. So, I mean, it looks like M2, it seems like M2 is trying to catch up with the gold price here. And go ahead.
Go and have a look at 2011 and see how the M2 was going up, but you actually went from 1927 all the way down and languished for ages. So that's why I want to warn against just direct correlation. Where was the money going? It wasn't all going into gold because you wouldn't have gone from 1927 in 2011 all the way down to 1,047 if the money was going into gold. So these notions that you can always use something as an indicator, we tend to see the things we want to see. The first thing that I see on that chart is an incredibly strong green candle move since the 2000 break that is almost straight line up. And then, so it is a cautionary different. I took something totally different. Look at that 2000 move that broke there. Go 2024 April, a little bit to the right. You've literally gone straight up.
Mm-hmm.
And now you're getting selling wicks on 3 candles. Look at that structure. That candlestick analysis is rejection. The one candle got 50% rejected. You got a spinning star doji and you're sitting on a shooting star. That's candlestick analysis on a big time frame, and it's very useful directionally. So you've had an absolutely violent move when you're on the bigger time frames. If you look from the 2000, it's almost near vertical. There's always a gradient. Obviously, time moves on, but it's been an incredibly powerful move. So you could pull back, as Eric said, to 3 grand, maybe a bit below. We've actually started to speculate draw, and we have some downside targets. But the only concern that I will add is that the first setup in a new trend has the potential for overperformance. So even if you get a geometrically induced target, it's a bit like a head and shoulders. You get a target, but it can be, in certain instances, you can get overperformance. I don't think this is a cyclical top. I'm calling a localized potential high at the 3.5. The other, out of the blue, totally random fact I will give is that we also watch crypto, and this isn't a crypto channel per se, but the last time when we had a bit of a crisis, we had a run on Tron. And Tron, I haven't worked out, and there's better people for speaking to this, but Tron is both the Eastern, there's an Eastern element to it, the whole Justin Sun, but I also think he's just a front man, like with everything. Most people are actors. The people you see are the people you shouldn't be worrying about. It's the people you don't see. But we had a run up in Tron here, round about December last year, and that tended. It's tended.
What is that?
Tron is a crypto. But the only thing I'm just thinking out aloud, this might be totally random and non-relevant, but it got a little bit of a blow-off shoot when people are moving money into Tether because it's a cheap currency. It's one of the cheapest for USDT onboarding. And people utilize that when they're getting out of risk or on risk. So it can be quite a mid-late cycle of an alt run spike. And it had a little bit today of a little bit of a bump as well, which is unusual because it's actually quite low vol and being in a grinded up. So nice rounded bottom, but it's got a little bit of a bump. This was an exceptional one that was part of the alt run, but then you got quite a you can see crypto as a whole went into quite old sort of disinflationary environment where it pulled back and got a little bit peaky and a little bit twitchy. So I'm just looking at a lot of different things, and it might be a wild card, might be irrelevant. But if people are getting out of and sending money and getting back into fiat, we've had a lot of Bitcoin whales, by the way. Let me also mention this, all dumping Bitcoin. Now, I'm not saying calling a top. We had a target for 150, but maybe it's a more interesting journey. You get a sell-off period, and then you go off. So the question is there de-risking? And this is utilized for onboarding and offboarding into Tether. So think of it as bridging from the normal system into the other system, and it often gets a surge when it's being used a lot because it has a burn, etc. So take it with a pinch of salt. The mechanics of how it works is beyond me. I'm giving you just a technical take that part of it, but I've often seen that. So when you add that in, it's made me a bit more circumspect. The big whales unloading. There wasn't just one, there were 2, and it's 80,000. These are wallets that I would call are literally NSA, CIA, insider cartel wallets, unless you believe there's a guy called Satoshi that just disappeared, didn't want to collect his award and his fairyland, and did it for altruistic.
What's the etymology of his name? Literally translates to center of intelligence. I don't know if you know that.
Yeah. I mean, it depends what fairy tale you want to subscribe to. I don't buy many fairy tales too often.
Well, hey, let me put it back into Eric's side of the court here. Eric just sent me another piece of news that you want to take a look at. bring things back into precious metals. So you recently posted this: the head of Bank of China Macau has been detained by authorities while on his way traveling to Beijing. Why just a big story? What's going on here, Eric?
Well, Macau is like Las Vegas of China,
Mm-hmm.
basically, right? So in the past, a lot of entities in Macau uses their positions to circumvent the capital controls of China and to basically transfer foreign exchange of China for the entities within China. So this is a big event. Like, I mean, this is the head of the Bank of China, which is like one of the top state-owned banks in China. Francis probably noticed, right? They're like the number one, basically. But next to the PBOC, right? Bank of China is number one next to the PBOC, which is the Federal Reserve of China.
Mm.
Bank of China is the biggest, essentially the biggest commercial banks that is also state-owned in China. This guy was the head of the Bank of China in Macau, which is the city where, all these under the table, wink, wink, unofficial, I guess, foreign exchange, unauthorized by the central government, leaves China. It's through Macau. So this guy being detained, arrested, detained, okay, is a big signal. That means that, with everything that we're seeing here, is that the Chinese money printing machine ain't going to stop. It's just starting. Okay. Why do I say that? Well, if you are printing money, what's the first thing you want to do? You want to make sure that, like, unauthorized entities are not going to try to take that money and then convert it to foreign exchange and have it leave China through Macau.
Mm.
Make sense? And this guy probably got caught with his hand in the cookie jar in the past, and the central government decided to pull the trigger now to make a statement to everybody. Like, kind of like, you shoot the tiger, and then that's a statement to all the jackals and the wolves and the bears in the forest. Okay? Make sure that everybody is in line. So what I'm trying to say is that I believe that the central government is serious about the current, efforts in liquidity injection into the system. On top of that, we got to remember, Danny, that what Francis described is almost a straight path for like the gold price in the last, let's say, 12 months, essentially, from the breakout point of, let's say, $2,000, okay, to what we are now, $3,300. You got to remember, there were corrections uh, during this ascension, okay. However, every time when gold got slammed, what happened? The Chinese SGE, which is the Shanghai Gold Exchange, right, had the big arbitrage in pricing versus the Western gold price. So every time when the West dumped the gold price, China's gold price, stayed at a high level, and then the gold flows accelerated to China, therefore pulling the gold price back up. So what I'm trying to say is that I'm not going to say that a big slam is impossible. Of course, it is possible. It is possible that it goes right back to 3,000. But then at that point, how big will be the arbitrage between the gold price at the Shanghai Gold Exchange versus the gold price at the COMEX and the LBMA, right? If it's a big arbitrage at that point, then we'll get a very quick V-shaped bounce, okay?
Mm.
Like in the past. So that's possible. That's, again, by the way, that's something different versus pre the uh, Russian invasion or the special military operation in Ukraine. Okay, before the U.S. froze Russian assets. Okay, the SGE to Western gold exchanges arbitrage wasn't as big. But then after the West, European Union and the US froze Russian assets, after Russia started the special military operation in Ukraine, that arbitrage became very big. Every time when, like I said, when the West tried to slam the gold price. So, like again, let's go back to this, right? We don't know what's gonna happen this time. But if what happened in the last 12 months is a reference to what may happen going forward, we might have a quick slam, then a quick, reversal from that bottom.
And I also might add, if you look at the last two big slams, the last one being the Liberation Day sell-off, the one before that was the yen carry trade sell-off, and even before that, you look at the COVID sell-off too. When the market dumped, in all three of those cases, gold and silver did dump as well, but gold in particular held off relatively stronger than pretty much any other asset too.
Yeah.
Because like I said, this time I don't want to sound cheesy, but this time it's kind of different, right? Because now, gold is becoming well, it's not new, but like renewed global reserve asset.
Correct.
Yeah, so there you go.
Yeah, go ahead and add anything you want to add there, Francis. Also, I've got the this cartoon that you sent me as well, Eric. So I think this pretty much encapsulates what you were trying to say. Things could get slammed, but then the broader thesis at play is much bigger than like a local slamming. Is that correct?
Correct. Yes, that's what that cartoon says basically.
Yeah, and on that point, Eric and I are totally aligned. I've thrown a wild card in, and this is about short, medium term potential disinflationary event to try get better control. Like you say, maybe buy up some puked gold on a slam. Nothing changes my overall macro hypothesis that we're in a debt-based collapse, as we've always said. And they need to actually try flush some money into debt so that maybe they can scratch out a rate cut of some sort. But it won't be as well received in a demand-destroying event because a lot of the money still wants gold more this time than previous. By saying the 40-year bond bull market turned in 2020, we've already staked our colors out there. However, in that journey, there isn't that straight line up. And when you're on the longer time frames and you looked at that 2000 move, that was pretty simple stuff. And you made 3,500. We called for a 50% move. The Trump tariff tantrum actually popped you an extra $500 out of nowhere. It took us a year to go from 2,000 to 3,000, which was our targeted call. And then you started to come off, and then you got this geopolitical event that gave an absolute melt-up moment of 4 quick candles that took you up $500. So we took a year and a bit to do the 1,000, and then you got bolted on this 500 that was entirely geopolitical and was a major flight of money out. And that tends to be quite exhaustive. So you could have a localized high for a while. That doesn't mean we're going back to 2,000 at all. In fact, I'd be a huge buyer if it was. But the circumstances of the environment of just one way up for people who've been leverage trading this could be very, very different. And we were the fanboys of this being a breakout ourselves, not a week ago, sitting in London. And I've now had a rethink, and I've now looked at more things, and I'm flipping my view that leverage long should watch the hell out and should preferably have very tight stops and real good reasons. And I'm not in that camp right now.
What's the support? Where's the support at in the event of a breakdown?
Let's go back and give you my. So I actually have already got an inverted draw, which does provide a target on it. Let me just get it back to gold, away from the gold-silver ratio. And by the way, also on the gold-silver ratio, just while we were here, because we said some things, this typical area has been resistance, this orange area, which I've now done in pink. It's typically where it's been resistance. You broke out there, you might find a degree of support. You can see where I've highlighted it a number of times. This is a very dense area for the gold-silver ratio to work through. That's why it's a big significant moment. If we come out the bottom side, we run that and the 65. Then I'm all in on, and that typically comes in a QE type moment post a drama, where they're unhinged. They went unhinged after CV19 on the print. That's when you had your 2021 high. It came out of that 2020, the response to March 2020. Which actually started first with a disinflationary problem at the back end of 19. So that's how it works. You have a repo market crisis. Quick, bring on the special health interventions. Boom, health interventions and the fiat blowout. Then you got your 2021 high. So bad leads to good. But the point about timing is I want to show you two things actually to answer your question. Where's the support on gold? I also want to, just before I do that, so that I don't forget, show that on silver, because you should be able to do technical analysis on everything. There was a little bit of a reversal here with a neckline. And typically after target runs, you can see the blue line through here, you get a break. That target is up there. You've got a shooting star candle, not massive. That means a candle without, let me just hide some of the lines because we do so much analysis, can look messy. But it's a doji shooting star candle after making that target, which again, if I turn it on, the dotted purple line was just made. So you've made something technical that says, listen, don't be wading in leverage long. It could be small and it dips back a little bit. And this is a bit of a nothing, and we carry on, and the M2 keeps pumping, as Eric suggested might, and then we'll be buying long again, but gold and precious metals just sit back a little bit, or it could be something larger, and I mentioned the seasonality and various other things. What I love about Eric's viewpoint is that he has a Far Eastern viewpoint, and I think there's so much to that. And I had one observation, that when the dollar was really weak, that's the Taiwan dollar, the dollar was super weak, but the Hong Kong dollar trades in a controlled range. And so it's like both, it's not a peg, it's a floor and a ceiling to correctly determine it. And whilst the dollar was spilling, the Hong Kong dollar went really violently from the one end up. So this is USD Hong Kong dollar. So actually what should have been happening is that the Hong Kong dollar should have been sitting along the bottom like it did here, because the dollar was so damn weak. But what actually was going on is that this Hong Kong is more and more weaker than the dollar at the time that the dollar was really weak. So I was questioning, and I would expect someone with the news like Eric will pick it up long before I do. That was fascinating, that Macau arrest. I didn't know that. And I love to hear that kind of news, because I'm thirsty for Far Eastern news. Japan, Hong Kong, China. This is very important stuff. Everyone's forgetting that these are massive economies, and they're going to probably be the bigger, better survivor out of the collapse of the West. And a lot of the flight capital will go from West to East, as has the gold before it, which again, why I reassert I'm a precious metals bull. And I think it's just being moved by location. But let me just pull that up. I'll do it on a split chart. And you can see the Dixie was actually going down. And yet you got a worse performance out of the dollar. So if I just take that away and go, in fact, let's just go Euro USD, because those kind of trade when it's good for the one, it's bad for the other one. You see that? You see the US strengthening against the Hong Kong dollar weakening, and actually that was all during a period that the euro was largely trading up. See these green candles. So this was a weak period for the dollar. So euro up, but against the Hong Kong dollar, the dollar up. And it's in a range, okay, but it was violently up. It went across that very, very quickly. So I was wondering if to maintain the ceiling, there's not a possibility that maybe the demand destroying event would be the consolidation of the Taiwan dollar and the Hong Kong dollar. I wouldn't do them one at a time if I was China. I'd seize Taiwan and merge the two. And that means more reasons for the yuan becoming a bigger currency, a more serious currency, because there's no longer alternatives. And the Macau kind of stuff that he's talking about, people hiding in islands, maybe using some of the other currencies, maybe they're in Hong Kong, maybe they're in somewhere else, that would go away. Because I think there's a consolidation of the Eastern currencies going to come out of a demand-destroying event or a war with Taiwan or any annexation or anything. And I think the currency markets is where you'll see it first. So I'll just throw that out there. Is there pressure in Hong Kong right now? And is it being bled down to eventually be subsumed? I think that's the eventual outcome. And we have interest. We're watching the Korean one as well. I wouldn't even rule out the impossibility of things going on in North Korea and South Korea, because we're very concerned for this Korean one. So it's an interesting world on currencies. I just throw out a few unfiltered thoughts, but that might point to the East being a place that needs to be watched much more by Western technicians and traders for big moves.
Okay, well, I just want to jump in here and answer Francis' question about like why the Hong Kong dollar is weaker than the US dollar. So what happened there, Francis, is that during that period of time, the Hong Kong commercial real estate market melted down. I mean, literally,
Yeah.
okay? Do you know that? So like,
No.
I mean, it was in a bubble in the first place. Like the prices of commercial real estate in Hong Kong was at the stratosphere, right? It's like somewhere in space, basically.
But it's always
Alright.
been there,
It was,
hasn't it?
yeah, but like
been
this
a bit
time, it's
overvalued.
even, it's like off to Uranus, basically. Okay, this time. Okay, and with COVID, and then after COVID, you have supposedly there's a bounce back, but it never did because people, consumers started to spend the money in China, in Shenzhen instead of in Hong Kong. So like all the commercial real estate in Hong Kong really plummeted because the restaurants, the shops, whatever, they couldn't make money. Like it's
It's
just
just
said,
May
like,
and June, though. These are great points, but was this specific to the months of May, June?
yes, Francis.
Yeah,
It
okay.
accelerated in May and June. So you
Okay.
have for example, the big real estate company New World in Hong Kong, like that's like on the Hang Seng Exchange, basically. It's one of the biggest names in Hong Kong, like real estate company, right? It has a huge debt load that it cannot pay off, basically. Like it's at the verge of default.
A zombie company,
Okay.
basically. Yeah.
It's not a big company, yeah. And the funny thing is, like, which I find hilarious, is that like these real estate companies owe HSBC and all these Hong Kong banks a ton of money, billions of dollars. But guess what, Francis? HSBC is making a new high.
Unbelievable.
Like,
Yeah.
I mean, nobody dares to even talk about this. HSBC is the big boy in town, right? So it's funny. I'm probably the first guy who's talking about it. Like, hopefully, I don't get. Yeah.
But do you not think all this M2 extremity is actually making the fiats globally all devalue to eventually make these guys solvent again?
Supposedly, right? Supposedly. So a couple of things are happening, right? Like you're asking me, okay, why is it that the Hong Kong dollar is so much weaker than US dollar? Guess what? Guess what they're doing to help these real estate companies in Hong Kong? During this period, the Hong Kong government and the Hong Kong banks essentially, kept interest rates like of the Hong Kong dollar extremely low. There's like something like a almost 4% between the US dollar interest rate compared to the Hong Kong dollar interest rate of the same duration. Okay, bonds. So I mean that's insane. It's like your $3. Like if you have like two currencies that are supposed to be tied together by a floating peg, but the interest rates of these two currencies are not the same. As a matter of fact, they are almost like, I mean, the spread of these two interest rates are almost as wide as the US dollar compared to the Japanese yen.
Yeah.
That's how bad it is. Okay, Francis, right?
Yeah.
So that's why you have the, Hong Kong dollar weakening to the lower bound compared to the US dollar. They are trying to help these real estate companies, but like I don't know, I really don't know how much they can help. I mean, like they're trying to restructure the debts of these real estate companies in Hong Kong. But the fact is, consumers are simply changing the habits in Hong Kong. They're no longer really shopping in Hong Kong as much as before because they use things like Taobao or Alibaba, right? They shop directly from China. And then, like my family, we went over to Shenzhen for the weekend because it's so much cheaper to spend money there, right? To, go to fancy restaurants, like five-star restaurants at the Marriott, at JW Marriott in Shenzhen, is something like one-third the price of like the exact same thing, at the JW Marriott Hong Kong.
Yeah.
So I don't see how this is going to resolve itself, Francis. That's what I'm saying, right? But at the same time, like the Chinese government is trying to get away from the US dollar and focus on physical gold. So there are many moving pieces of this puzzle that is constantly moving, gyrating, happening right now. It's a complex situation.
I think that peg has to fail or it gets subsumed by China. And like you say, actually China has beautiful cities now that are newer and fresher than Hong Kong and cheaper to shop in. And people don't work from home near as much. The Westerners don't want to do the Hong Kong gig anymore. It's going quieter there because Chinese cities are now actual real rivals now to Hong Kong, that Hong Kong will soon become an irrelevant. So I can't see a world in which and actually, it is just an opium war relic. It is China. It belongs to China. It was some weird negotiation that should never have happened by the drug dealers, and it should be part of China. And I think it will be eventually all a part of China. But yeah, interesting. Thank you for the share. It was interesting in June that specifically happened because it's going up and down generally, but in that range, but not violently. It's suddenly sort of like an electric fence shot across the band. And that caught my eye. And I thought, because I'm sitting waiting for it to fail. It's almost like a trade of mine, a macro trade, but you can't sit and hold it forever. You have to be just a few moments before, really, just in time. And that's going to be really hard to do. I'll probably end up missing it. But I do think the Hong Kong dollar has a fail moment on the peg, or there's some crisis generally in the area, and during that time, China just takes it over, and it becomes part of the yuan family.
I think my 2 cents on the situation is that I think eventually the Hong Kong dollar is going to be pegged to gold because Hong Kong has a role in this whole Chinese new kind of like new, I wouldn't say new world order, but new Asia Pacific order, right, for China, where they still want to maintain Hong Kong as a buffer, as a buffer zone to the outside world. So what is the next best thing other than the US dollar for Hong Kong, for the Hong Kong dollar to be pegged to? Gold. But not at this current gold price. I think like what will happen is once gold gets properly revalued to its actual, intrinsic value, right, which is not not $3,300, much higher, right? Then I think the Chinese government will peg the Hong Kong dollar to the gold price, and then you have the RMB. And that makes complete sense, right? Because then you have the offshore and onshore RMB system, and then you have the Hong Kong dollar pegged to gold to supplement that.
Forgive my ignorance because I'm not smart enough to know about that part of the world. But Macau it's on the yuan, the Hong Kong dollar, or what currency is it?
Macau has its own currency.
So it
It's
has
called the
either been or
Macau
been a
dollar.
Macau
Yeah,
specific third option.
but it's kind of like a Mickey Mouse currency because nobody uses it.
Okay.
Yes,
Even in Macau, they don't use it.
they don't. I mean, it's funny. These I go to Macau, they take the Hong Kong dollars.
Hmm.
It's like you go to Mexico and they take U.S. dollars.
Yeah.
You see what I'm saying? So they take Hong Kong dollars in Macau. Yeah,
But do they also
that's
take
basically it.
yuan in Macau?
Of course they do. In the past they do, but I think with the crackdowns now, they probably are forcing people to convert to Macau dollars. When
Okay.
you because like I said, they don't want that cowboy thing going on anymore, where the central government don't know where that money's going. So it's kind of like they're closing off the gates. This is mercantilism on steroids. Okay, they're closing all the gates and they're sucking in foreign exchange. Okay, and then they're switching over from U.S. dollar to physical gold. These are the things that they're doing, in like not in sequential steps like that, but like at the same time.
Eric, you said that the Chinese government will probably like
Yes.
to maintain Hong Kong as part of a nexus or a buffer between
Yes.
China and the Western world. Would Macau also fit into that categorization? Would they? I mean, wouldn't it be easier to consolidate them both into one entity? Why are they two separate entities still?
Because Macau is the casino city of China, like the only place in like China where you can have legal casinos is Macau.
See.
Get it? So that's why they would like to, they will like to maintain Macau as a separate standalone entity. That's the reason. And it will always be. It's basically Hong Kong and Macau is like the Casablanca of China. Makes sense?
I see.
Makes total sense, right? Yeah.
Viva Las Vegas.
Yeah.
Viva Las Vegas. Viva Macau. Yeah.
Well, all right, Jen. This has been a fascinating discussion. I know we all have to go here in a bit, but thank you so much for your time, Eric, Francis. Go ahead and give us out your socials and any parting thoughts, conclusions that you'd like to kind of put out there as well. I'll start off with Francis and close out with Eric.
I feel that we're already in a quasi-Marxist society where greater totalitarianism is going to be dropped down on most citizens of the world. That is quite a dark view. By the way, we all woke up, the sun still came up, we still loved, we still kissed. You're already in a communist society full of theater anyway, so don't be so terrorized by it. You've already experienced it. I think it's better to be a wealthy slave if you can't stop the system uploading than a poor one for quality of life. Invariably, you can buy the fast queue and the better seat in the 747 and all the usual things if you are. And I also fear that attack vectors have been released on us, particularly the Western sphere, which is not under official Marxism in the official context, is going to have it uploaded real quick. And part and parcel of that is the great leveling. If you look at the total population and the wealth spread, actually all by head, it's in the West. But a lot of it's been pumpermentals. You've got to protect yourself. And the Market Sniper YouTube channel is the first stop on that. There's a wealth to be made. There can't be crisis, and Eric knows this better than any of us, without opportunity, because China has a symbol that actually represents both, and they see the duality of it. And so all these things that you hear that are dark for me actually also represent great opportunities. So you need to be able to trade, you need to be able to invest, and you should build for the future. Gold still is a long run, absolute stack, and I can always be wrong that we don't get a correction, and there might not be a demand destroying event. We have been talking about it for a while. Everyone tells us how off we are. But I also suspect that it's higher probability this time. So you can profit and you can save yourself from losing money. And best thing to do is follow the channel. If you like what we say, look at the technicals, see how this trade turns out. It's a ballsy call. Everyone is a bull. But I think something could be coming down the pipe, and they need gold down. They need silver down. They need platinum down, and they often get what they need. Until next time, thank you.
And Francis, it's always refreshing to hear the counter argument to a thesis too, right? I mean, we get a lot of analysts and personalities come on, channels like mine, and the overall sentiment is bullish. So it's healthy to have a bearish view, use case to kind of keep in mind.
And it's by time frame, by the way. So the macro is still a bull. People don't realize that you can be bullish and bearish something, but on different time frames. I can be bearish on the 5-minute chart, but I'm a monthly bull, I'm a 6-monthly bull, I'm an annual bull, etc. So please recognize that doesn't mean I've just suddenly turned on you and no longer a friend, and I'm a false friend of the stacking community. I just think that we can have a sell-off. And it will present an opportunity for those who are prepared. So being forewarned to the possibility, not the guarantee, is going to put you in a better situation if you choose to heed it. That's all.
Understood. Eric, go ahead. Any parting thoughts, and drop us where we can find you.
So people can find me at King Kong 9888. That's my X account. And my parting thoughts, if you don't own any gold and silver, I would recommend anybody who don't own any gold and silver right now to start stacking. I mean, you can do the dollar cost average, and start buying, I guess, like 10, 20 ounces of silver at the current price. And if it corrects, like Francis said, you add more. And that's what you do. Like, I mean, if you're not leveraged, I think that's the best approach, because we can all sit here and predict where the price is going to go, but essentially at the end of the day, nobody knows. Nobody knows exactly where it's going to go in the short term. So the best thing to do, if you're just a stacker, is to dollar cost average this thing and buy it on a, if you have the funds, do it on a weekly basis. If not, you can do it on a monthly basis.
All right, very good. Where can people find you, Eric?
Oh, like I just said, King Kong 9888 on X.
Gotcha. All right. Well, guys, gents, thank you so much for making the time. This has been a very riveting discussion. We went all over the world, literally. So if you enjoyed this podcast, drop us a like and comment. Go, Eric, go. Go, Francis, go in the comment section. If you disagreed with any the comments here, which I'm sure there will be disagreements, let me know what you disagreed on and why. I do, in fact, read the comments, and subscribe to the channel so you don't miss another episode, and check us out on Substack at CapitalCosm.substack.com. And for all of your silver buying needs, check out our good partners over at firstmint.com and use promo code CAPC for hot deals on silver. All right, guys, thanks for watching. I'll catch you later.